This week's US CQM Forecast Alert is: which economic growth rate should we trust? A large drop in goods import in October led to a significant upward revision to the expenditure side economic growth, while weak employment growth in December kept the income side economic growth low. PCA forecast saw an upward revision to economic growth following the S&P 500 update, but a downward revision following the employment update. Goods imports fell sharply in October by 4.52%, compared to the ADIMA forecast of a 0.58% increase. In the December employment update, compensation of employees for 2025 Q4 was revised slightly upward from 3.6% to 3.8%. As a result, the real GDP growth rate on the expenditure side has been revised upward to 4.47%, while the real GDP growth rate on the income side is still only 0.42%, indicating that the economy on the income side is weak. Compared to the high growth in real GDP on the expenditure side, real domestic demand and domestic final sales are projected to grow at negative rates. On January 5th, the PCA forecast revised the economic growth rate upward from 1.87% to 2.09%. However, on January 9th, it was revised significantly downward to 1.60%. The main reason for the upward revision of real GDP on January 5th was that the S&P 500 grew in December, significantly exceeding the ADIMA forecast. The PCA forecast on January 9th showed employment numbers significantly lower than the ADIMA forecast, resulting in a downward revision of real GDP. The significant drop in imports in October is reflected in the PCA in the form of the export-import ratio. It can be said that the negative impact of employment on real GDP more than offset the positive impact on GDP of the rising export-import ratio. Conclusions from this week's US CQM Forecast Alert. The first, a significant decline in goods imports in October and weak employment in December have led to a large divergence between the expenditure side and income side growth forecast for 2025 Q4. The second, the US economy is not as strong as its real GDP on the expenditure side suggests. The third, judging the economy based solely on real GDP on the expenditure side in short-term economic models carries risks. The fourth, the role of economists is to interpret the result of various forecasting approaches for making correct economic judgment. This slide contains additional information about this week's detailed CQM forecast.